Welcome back to the Wall Street Podcast. Today, we're digging into Goldman Sachs & Co., LLC's report on Meta platforms, specifically their Q2 25 earnings first take. It was released July 30th, 2025. We'll give you a quick, sharp overview of Meta's financials, their guidance, and strategic priorities. This is tailored for you, our knowledgeable listeners.
Exactly. The report really zooms in on Meta's strong Q2 earnings, mostly driven by that core ad business. And it gives us updated guidance for Q3 25, plus a first look at expectations for 2026. It also touches on key strategies, AI, Reality Labs, and points out some risks too.
Okay, let's break down Q2 then. How did the actual numbers compare to what Goldman Sachs estimated? Revenue first. Meta reported $47.52 billion. That's quite a bit higher than the $45.04 billion estimate.
It is. That's 22% year-over-year growth, currency neutral, really powered by ad impressions up 11%, and pricing, which rose 9%.
And that's mostly the main family of apps.
Predominantly. Family of apps revenue was $47.15 billion. Reality Labs brought in $370 million.
Right. What about profitability?
Well, GAAP operating income hit $20.44 billion, also beating estimates. That gave them a 43% consolidated margin.
Pretty healthy overall margin.
Yes, especially driven by family of apps. Its margin was 53%, generating nearly $25 billion in operating income. Reality Labs, though, is still posting losses. A $4.53 billion operating loss for the quarter shows where the big bets are being placed.
And engagement. Users.
Daily active people reached 3.48 billion, and GAAP EPS, earnings per share, was $7.14. That's comfortably above the $6.06 estimate.
So a strong Q2 by most measures. Now looking forward, what guidance did Meta provide? What should we expect next?
For Q3 2025, they're guiding revenue between $47.5 billion and $50.5 billion. That's actually above street expectations.
Yeah.
They also noted about 100 basis point or 1% tailwind from foreign exchange.
Okay. And costs for the full year? Any changes?
They narrowed the range for 2025 GAAP expenses to $118 billion, and CapEx, capital expenditures, tightened to $66.72 billion.
And then there's 2026. What are they signaling there? Sounds like more spending ahead.
Yes, definitely. They anticipate faster GAAP expense growth in 2026 compared to 2025. The guidance is 24% year-over-year growth. That's largely down to hiring, employee growth, and depreciation from all the investment.
And CapEx also growing.
Also expected to grow substantially. They said a similar dollar increase as the midpoint for 2025 implies. So continued aggressive investment.
Which aligns with the strategic areas Goldman Sachs highlighted, right? AI, Reels, Advantage plus ad.
Exactly. Investor focus is expected there. Plus, the general ad market health, shifts in short-form video, and, of course, mixed reality or spatial computing developments.
Let's dig into that Q2 revenue beat a bit more. You said it was core advertising. How sustainable does that feel?
It feels pretty sustainable for now. The growth in both impressions and pricing is key. It shows their tools, like Advantage Plus and Reels monetization, are working effectively. Despite some macro worries, the digital ad market, at least for Meta, seems quite resilient. This performance sort of funds their bigger, longer-term bets.
Right, those big bets. They're flagging significant expense and CapEx growth for 2026. What does that tell us about the long-term play, especially with Reality Labs losing money?
It signals they're absolutely committed to these large-scale investments, particularly AI infrastructure and, yes, Reality Labs. They seem to be prioritizing building foundational tech for the future. AI integration, the Metaverse vision, over maximizing margins right now.
It's a long game.
Very much so.
Yeah.
They're accepting near-term losses in Reality Labs for potential future dominance.
Okay, so Goldman Sachs keeps its buy rating, $775 price target. But what are the main risks they flag? What could derail this?
The key risks are pretty clear. Intense competition, obviously, for user time and ad budgets. It's always there.
Yeah.
Also, the risk that these huge long-term investments might drag down margins for longer than investors expect.
And regulation?
And ongoing regulatory scrutiny, yes. As a constant factor across different regions, these could all slow down returns on their strategic bets.
So wrapping up our look at this Goldman Sachs report, Meta is outperforming on the core business, funding significant future investment.
That's the picture. Strong ad engine, big spending on AI and the Metaverse. The crucial question for you to ponder is, will these massive long-term bets actually pay off? Can they translate into the kind of sustained, profitable growth needed to justify valuations? Or will competition and regulation prove too much of a headwind down the line? Something to consider.